Hello students, welcome to the class of Edunguru. I, Kishore Sukramani, will continue the basics of partnership final accounts that we have started in our last lecture. As you all remember, we had discussed a process of learning in the previous lecture. You are supposed to know that we start with transactions, move on to journal, followed with ledger. Also at the point of journal, we have subsidiary books as an alternative. Then after ledger, we have trial balance coming up. Now till the trial balance, it is highly possible that you make some mistakes. So those mistakes are presented in the form of adjustments. And with the trial balance and adjustments, dear students, you are supposed to make final accounts, purpose behind which is to find the profit or loss. So that's where we had stopped in our previous session, that final accounts is prepared in order to find the profit or loss incurred in the business. As I told you, it is nothing but the report card of a business. You have done business the whole year, so it is very important that you now come to know how you have fared. If you have earned profit, how to increase it. If you are already in a loss, how to change it to profit. So this is the reason, dear students, for which we make final accounts. Now we have not been new to final accounts, we have studied it in 11th standard. The trading account, the profit and loss account and the balance sheet is what we have prepared in the last year. Trading account was meant to record all expenses related to goods and factory, followed with profit and loss account, which was meant to record all indirect expenses, dear students. Now just to remind you, whatever expenses are related to factory which come in the trading account are called as direct expenses, whereas the expenses which come in profit and loss account are called as indirect expenses. Now remember, the difference is very simple. You need not remember what kind of expenses come in profit and loss. Rather, you should easily remember it as all the items which are non-factory related expenses and incomes will have a place in profit and loss account. So that will make your job easier, as you will have to only identify whether the expense is related to factory or not. If it is surely going in trading account. If not, it is going in profit and loss account. That's the easiest way to identify. And regarding balance sheet, dear students, just a quick recollection. Balance sheet is a statement of assets and liabilities. So balance sheet, dear students, is our statement of assets and liabilities, which shows us that what is the exact balance of assets and liabilities on the last day of the accounting year. Now I am sure every one of you is aware that final accounts is prepared at the end of the year for the particular year. So be very careful when you give your headings. In trading and profit and loss account, you are supposed to write for the year ended, as whatever expenses and incomes throughout the year were being incurred or earned are recorded. Whereas balance sheet, dear students, is not a particular for the year kind. Balance sheet is a statement as on. If I am having furniture, on the last day I am having this much furniture. I might have had some furniture before, or I might have sold or purchased additional furniture during the year. But as on the last day, this is at which value my furniture stands. So in similar way, all your assets and liabilities are actually representing only the status as on the last day of the year. So these three exact statements, so this trading account, profit and loss account and balance sheet, dear students, were prepared by us in 11th standard for a sole proprietorship firm. Now what exactly was a sole proprietorship? A business where owner is just one. In 12th standard, what we have been learning is partnership firm. When it comes to partnership firm, it is two people or more people doing business together. How do we maintain final accounts for such a business? So purpose of this chapter, dear students, is going to be what? It's going to be finding out the profit or loss for a partnership firm running a business. Now, more or less, whatever you have learnt in your 11th standard, you are going to follow the same concepts again, but just let's have a quick recollection so that we are sure that each and every one of us is aware as to how a trading account, a profit and loss account and a balance sheet appears. Now, as told to you, dear students, this is how your trading account looks. Your particulars with two amount columns on the debit and the credit side. Now the first category that comes in trading account is account related to goods. Now the four accounts that minimally are present in every sum are opening stock, purchase, sales and closing stock. These four accounts will always be present as related to goods. What exactly do we mean by opening stock? When I say opening stock, what I actually mean is the stock available in my business at the beginning of the year itself, unsold goods of last year. Whatever goods I couldn't sell in the previous year, I have that stock ready with me on the first day of this year. That itself is called as opening stock. Now what is the purchase? It's an obvious answer that I will not just sell what I have since beginning. I will need additional goods to be sold. Whatever goods I purchased during this year freshly is recorded under purchases, followed with sales. Now what does sales record? Whatever goods are sold during the year either for cash or for credit, both are recorded together as sales. And then the last one, dear students, is closing stock. Now what does closing stock mean? Whatever goods you have during the year with you need not necessarily all get sold. So whatever does not get sold is your closing stock, which means the balance of unsold goods at the end of the current year. So at the beginning of the year, it is opening stock. At the end of the year, it is closing stock. Now these are the four main accounts related to goods which we have seen before. Would like to just pose a question to all of you and expect an answer from you in the form of true or false. I am going to pass a statement right now. Just think over the statement and whether the answer for it should be true or false. Opening stock plus purchase is equal to sales plus closing stock. Now let me tell you students, honestly what has happened is that the question from my side is incomplete. Let me now tell you the entire question. My entire question appears like this. Opening stock plus purchases is equal to sales plus closing stock, bracket quantity wise or amount wise. Now is your time to think exactly as to what would be true. Let us take an example, dear students, and try to understand whether it is true quantity wise or amount wise. Let's say in my business I am having some units which I am selling regularly as a trader. Let's say opening stock is 50 units with me, which means from last year the unsold units are 50. Let us say 500 units are purchased by me during this year to sell. So that makes it a total of 550 units in my godown. Assuming that 450 of them have got sold, can I say 100 units will remain in the godown? That exactly is what you need to know, students. Quantity wise, it is turning out true. You can check it for yourself. Take a look at the debit side. Your opening stock and purchases is 50 plus 500, whereas your closing stock and sales added together also is 450 plus 100. So 50 plus 500 is 550, so also the credit side is 550. Amount wise, dear students, if this ever turns up true, it would be advisable to shut down your business. No businessman will ever have the amount same on both the sides. Obviously, the plan of any businessman is very simple: to buy at a lesser rate, to sell at a higher rate. So if at all it happens that the amounts are coming same, then it is not a business, it is charity. So might as well you close down the business. So remember, dear students, opening stock plus purchase is equal to closing stock plus sales, quantity wise, and definitely not amount wise. So quantity wise, dear students, is true, and amount wise, dear students, the answer is false. Now this is the basic minimum that you can expect in any question. Have you come across a situation where goods are neither sold nor they remain in the godown? Why not? For example, let's take a situation of goods lost by fire. If I have lost goods by fire, I have lost them by fire, which means they are neither sold. Also, I have lost them, which means they are neither remaining in my closing stock. Take an example of goods given as charity. If I have given goods as charity, I have given it already as charity. Charity does not imply sale, which means it is not a sale. And I have already finished giving them as charity, which means they are no more in my stock. So also, dear students, you have goods given as free samples, goods lost by theft, goods lost by fire, goods distributed as free samples, also goods withdrawn for personal use. It may happen that the partner withdraws goods for his own use, because of which if goods are withdrawn, which means they are neither sold nor present in the closing stock. Now these are the other names, dear students, that appear in your trading account and represent accounts related to goods. Now what else can we expect in our trading account? In our trading account, dear students, we can expect different names related to factory. Like for example, we have names like wages, carriage inward, which is your transportation charge for bringing goods inside. You can also have freight inward, which is nothing but similar to carriage, only the mode of transport is different. When you transport goods through road, the expense is called carriage. When you transport the same goods through train, plane or ship, it is called freight. So remember, dear students, there are other many more examples that you are likely to come across, and you have already seen them in your 11th standard. Clearing charges, works manager's salary. Now works manager's salary means workshop manager's salary. As simple as you have made prof of a professor, the accounts has made workshop as works. So that's how the works manager salary name has come up. It actually represents workshop manager's salary. Moving further, you have clearing charges, which is the amount spent on clearing your raw materials from the docks. Obviously, if you are bringing for raw materials from the docks, it will require money to be paid to the clearing agents, as custom duty and other formalities have to be completed before taking away your goods. This will always happen when you import your goods from a foreign country. Now, given all the names and examples that you have seen, so considering our example, dear students, as you can see, 5 lakhs is on the credit side and 4 lakhs is on the debit side. 5 lakhs being the higher amount, how do we close the ledger? We record 5 lakhs on both the sides. 1 lakh falling short on the debit side, dear students, will be called as gross profit carried down. The reason we call it as gross profit is, dear students, this is not the final profit that we will be able to take home. This is the profit after factory expenses are taken care of. What about non-factory expenses which are going to come in profit and loss account? So this money will be taken forward to profit and loss account, where all other expenses will be met from the same, and then what balance will remain will be the final net profit which the partners will be able to take home. So let us continue and now see how does our profit and loss account look. Take a look at this trading account. Can you see 2 gross profit carried down on the debit? Now if I bring this down, it will obviously come on the credit side of profit and loss account. So continuing further, the profit and loss account will start with by gross profit brought down on the credit side. Just imagine you making the profit and loss account below the trading account. So carried down amount has now finally come on the credit side as brought down. Now what exactly do we record in profit and loss account, dear students? As discussed before, we have decided that whatever expenses are not related to factory are the expenses to be recorded in profit and loss. So let us go and take a look as to what exactly are the names which we can expect to see in profit and loss account. The typical regular usual names which you can find in your profit and loss account are salaries, postage and telegram, printing and stationery, the regular office expenses, audit fees, which actually means inspection of your accounts fees. No person will check your accounts for free, so whatever fees you end up paying there. Then you have your other expenses coming up as electricity charge. You also have your royalty on sales coming here. Mind it, dear students, royalty on production or purchase is a part of trading account. And also, if the question just mentions royalty, it will always be shown in trading account. Similarly, if nothing is mentioned next to rent, it will always be treated as office rent and shown in profit and loss account. Just carriage, dear students, will always mean carriage inward. So carriage inward and outward, be very clear. Inward comes in trading, outward comes in P&L. So also royalty on purchase comes in trading and royalty on sales comes in P&L. Advertisement expense, a typical business expense, a regular expense for any business, is shown in your profit and loss account. Now when I say profit and loss, I have recorded my expenses, but there are few losses also which I can expect to record. The possible losses that can come in a profit and loss account are depreciation, which is your wear and tear of assets. You can have loss by theft, you can have loss by fire. Remember students, in trading account, the goods lost were recorded. The monetary loss of the same will be recorded in profit and loss account. Any transaction anyways has two impacts, as you have learned, dear students. So one impact will be in your trading credit when the goods are lost, and the impact of that loss or the actual recording of loss will happen in your profit and loss account debit side. Now once I record the losses here, there is another possible loss which is regular and common and seen by all of us many a times: bad debts. Bad debts, dear students, is an obvious loss which we have seen many a times coming up in profit and loss account. Now bad debts also is an important adjustment when it comes to provision for doubtful debts. We will see that in our further sessions as to how to deal with RDD, that is your provision for doubtful debts. At present, remember, bad debts being a loss is also a part of profit and loss account debit side. Further moving on to the credit side, there are some incomes also which get recorded in this account. Like for example, any rent received, any discount received, any commission received, any interest received. Yes, dear students, you can receive interest on investments, or it is possible that you may receive interest on any money given as loan by you. Similarly, you can have an interest on loan taken on the debit side of profit and loss account. These particular incomes are possible on the credit side, and as we have seen one more loss of bad debts on the debit, you can have a name called as bad debts recovered on the credit. What exactly is bad debts recovered, dear students? Suppose a debtor in the past has cheated you and did not give you your money. Today he suddenly realizes, or suddenly he gains finances and comes and tells you that I'm sorry for what I did, please take your money. That money, dear students, is called as bad debts recovered. Earlier the person had cheated me, so I had recorded it as loss. Now the person is returning the money to me, so I'm calling it as profit and recording it by the name bad debts recovered. So this way, dear students, you can find a lot of names coming up in profit and loss account. I have shared a few of them with you. I'm sure you have a sample format with you where you can see all the other names possible as well. Now let's again say the total of credit side comes to 4 lakhs and the total of debit side comes to 3 lakhs. So now, dear students, 4 lakh on the credit, 3 lakh on the debit indicates again the credit side is bigger. As you know that the name, although is profit and loss account, profits are always on the credit side. So 4 lakhs on the credit, 3 lakhs on the debit indicates the bigger total is 4 lakhs. So I will record 4 lakhs on both the sides. The 1 lakh, dear students, which is coming up as a difference on the debit side is nothing else but your net profit. Yes, dear students, this is the amount that partners can finally take home. But mind it, dear students, last year, this money used to go away to the sole trader as he was a single owner and entire profit belonged to him. Now the same profit will be shared by the partners in some agreed ratios between them. We have already seen the examples of ratios and we have seen the basic concepts of partnership where we have understood how to tackle these ratios. So just remember, whatever will be the agreed ratio between them, in that ratio, the net profit will be shared by the partners as per the agreed situation. So this is how a profit and loss account looks, dear students. Now we will move further to the balance sheet. When we talk of balance sheet, dear students, has the following columns: liabilities and 2 amount columns, assets and 2 amount columns. As we all have discussed, balance sheet is a statement and not an account. Moreover, balance sheet is always recorded as on 31st of the year or end of the year. Liabilities and assets are present in the balance sheet. Let us quickly go through some of the examples that we are regularly aware of and let us quickly recall our concepts of balance sheet. Now on the asset side, dear students, you have your 4 intangible assets coming up, namely goodwill, copyrights, trademarks and patents. Goodwill, if you remember, is reputation of a business in money terms. How famous a business is in rupees is what is goodwill. Then moving further, you have patents. Patents is right to a particular technology which the company or the firm alone possesses. So that again is an asset which is intangible because right can only be felt, it cannot be seen. Moving further, the right to copy a particular symbol is called trademark. I am the only one who can use that symbol, that is trademark. You must have definitely come across a tick mark sign of Nike. You have seen the logos of cars like Ferrari and Audi. They are all the trademark symbols of those companies which can only strictly be used by those companies. Again, dear students, you might get confused that it is intangible or tangible. Of course, I can see the symbol, but the right to use it belongs to me, and right can only be expressed this way, dear students. So, right cannot be seen, and hence it is considered as an intangible asset. Moving further to the last name, copyrights means I have the rights to copy that product officially. So, nobody other than me can copy the product or make the same version of the product. Now, moving further to your tangible assets, you have land and building, plant and machinery, furniture and fixtures, then you have your building. So, these particular assets are coming up as fixed tangible assets. If I move further, we see investments in shares, bonds or debentures, or investments in fixed deposits. Any investment, dear students, is my way of putting money at a safe place or in a risky place in order to earn more money. Since the money belongs to the business or me, that money is called as my asset. Now, when I say investments, it could be in shares, in bonds, in debentures, in anything. Further, we have debtors as our assets. Now, why are debtors our assets, dear students? A debtor is a person from whom money is going to come. I am interested in that person only just because of that money. So, he represents my money, so it is my asset. So, it is my asset as he is a representative of the cash that I am likely to get in future from him. If a debtor has signed a bill for me, the name will appear as bills receivable. Closing stock also, dear students, is our asset. Any stock that remains at the end of the year belongs to us. So obviously, business being the owner, it is an asset of the business. Prepaid expenses are also treated as asset because service is still receivable from the person to whom we have paid the money before time. And since it is 31st of the year today, it is the last day of the year today, still I am calling it prepaid indicates service is going to come in the next year. So indirectly that person is my debtor again, dear students, and hence on the asset side. To end up on the asset side, students, we have cash in hand and cash at bank. Whatever money is there in your business drawer is cash in hand. Whatever money is there in your business bank account is cash at bank. That completes your asset side, dear students. Now we move on further to the liability side. Now when I talk of liabilities, the first and foremost biggest liability of any business is capital. Now please remember, students, capital indirectly is name of the businessman. So also is drawings. Do you remember those days in childhood when mom used to call us by our official name and we suddenly used to realize that if she is not calling me Guddu, Shonu, Pappu, it means she is angry right now? Just the way mom's mood was indicated by what she is calling you, similarly, business is indicating the mood of what he is calling businessman through the words capital and drawings. Like for example, if the businessman is bringing money, business is calling businessman capital. The same person, when he withdraws money for personal use, business is calling that same businessman as drawings. So for your simplicity, always remember, students, capital and drawings are nothing but names of the businessman given by business. That's the way businessman's money is tracked. And as I have always told you, accounts is not made for businessman, it is made for business. If I am Sonal and I have started a Sonal book depot, accounts are being maintained of Sonal book depot. So if Sonal book depot would be alive, how it would talk? It would say, Sonal gave me money and then I started. The money does not belong to me, it belongs to Sonal. So this is the way the liability part of capital is understood. Why capital is liability? Because from business point of view, it is not business's money, it is businessman's money. And that's why business is keeping track of that money by keeping a record of capital and drawings done by him. The next part, dear students, is obvious. If there is profit, it obviously goes to the businessman, so add. If there is loss, it will obviously be subtracted, so minus. Now, apart from these names, dear students, we saw two different names last year as well. The first one being interest on capital, the other one being interest on drawings. Now, what exactly is interest on capital? Whatever money owner has invested, he is expecting an interest on it. So, as you can see, it has been added because that much money owner will get more. whatever money he has withdrawn and taken home for personal use, business will charge him interest. So as you can see, it is being subtracted in his capital account. Now this particular value, after all additions and multiplications, will tell you your final money payable to the businessman. So you are subtracting whatever he is already withdrawn. You are promising him that he will get his profit. You are promising him that he will get his interest on capital, and you are deducting his interest on drawings. After that, you are getting the final money payable to him. Now moving further, what are the outside liabilities? This particular was an internal liability. It was owner's money after all. Now if I talk of outside liabilities, what are those liabilities? Creditors, bills payable, outstanding expenses, money received in advance are all your outside liabilities. Now once I finish recording all my assets and liabilities, dear students, if at all everything has been correct, my asset and liability side will automatically match. That's what is called tally. It will tally, which means it will have the same total coming on both the sides. I know it's been a dream of many 11th standard students to finally achieve that tally in one attempt. And I hope that with practice and effort, at least this year you will be able to achieve it. So this, dear students, is our trading account, profit and loss account and balance sheet, which you had learnt in 11th standard. I hope you had a quick recollection of the same. Now in our sessions to come, we will be seeing as to how to handle the various adjustments, which was a headache again in 11th standard. I will help you recollect all the adjustments one by one with their respective two effects, and then we will move on to the problems. So let's quickly recapitulate as to what we have learned today. Today we have seen that trading account is the account where goods and factory expenses are dealt with, and we have also seen good examples about it. Then we moved on to profit and loss account, where we have learned that non-factory expenses are recorded in profit and loss account. Moving further, we have recollected all the possible examples of balance sheet regarding our assets and liabilities. To watch the next video, please attempt the following questions.